What's up, everyone? Excited to give this video today about RIVN. So RIVN is rocketing higher over 14% today in reaction to news that the company's deliveries have jumped 59% to about 12,000 compared to estimates of 11,000 according to 15 analysts. So the bullish production numbers are really driving up share price today, and this comes on the backs of news that Tesla had record deliveries in their past quarter, which really just is bullish news for the general sector. And then you throw on top this bullish company specific news for a jump in deliveries. Well, that you add it all up, it's just a really, really good news cycle for Rivian. So awesome to see that there. And what I will kind of cover in this video is I will go over the chart, give a price prediction, I'll jump into short interest, I'll cover some of the financials, and then I will compare those financials to the peers. So first off, this is not financial advice, but let's dive into the chart and try to make a price prediction. So shares have came up to this $20 resistance level, which is where we saw consolidation back in February, and it's also where shares had bottomed back in May of 2022. So this $20 level seems pretty significant, or it's really about 1970, 1960. If we break through this level, we could see a move higher up to the 200 DMA at about $21. For me personally, I will be waiting for two things. I will be waiting for a move above this $21 resistance level. If we get a move above that $21 resistance level, well, I believe we could move higher pretty quickly up to about $32 over the coming weeks. So that's kind of what it would take for me to jump into the stock, kind of head first. And then another way that I would like to play this stock is if we come down to support at about 1570, 1580, I will buy some shares and or some short-term calls. So if we come down to this support level at about 16 bucks, which is where shares had consistently topped out for, the past 6 months or so, or really about 4 months, I think we would likely hold this level and continue higher for shares. So that's kind of my trading plan for Rivian. But with that being said, let's take a look at the stock's short interest. So shares are currently sold short. 13% of the float is sold short. And then days to cover is 3.4. For those that don't know, that basically means that it takes 3.4 days of average volume to cover the existing shares that are sold short. And this is a measurement of a short squeeze. So typically what we look for in days to cover, we look for days to cover of about 10 to demonstrate and signify a strong likelihood of a short squeeze. We just aren't seeing that here, obviously, with the short squeeze with the days to cover of 3.4. So I would give the short squeeze possibility like a D plus, C minus, just because really you need to see days to cover to be at least over 7 to think that a short squeeze is possible. That doesn't mean shares can't move higher, but in the short squeeze fashion, it doesn't seem super likely. And then I'm going to go through Seeking Alpha with you. So Seeking Alpha puts all these scores relative to the peers, so valuation, growth, profitability, momentum, and revisions. So for example, valuation relative to peers grades out as a C, and let's take a look a little more granularly into those numbers. So obviously the company doesn't make any money, but one number I like to see here is price to book is at 1.2, and that's actually below the sector median of 2.2. For those that don't know, this 1.2 number means that the market cap is 1.2 times the value of the assets on the company's balance sheet. So that could be equipment, property, those sorts of things. And then EV to sales is also 1.9 relative to the sector median of 1.1. So not a horrible number, not a great one, but pretty middle of the pack. Obviously, though, the company doesn't make money. That is kind of what you can take away from this. But I do think the price to book ratio is pretty solid. And then, the growth metrics look very, very good with revenue growth year over year at 1,300%, and then year revenue growth for the next 12 months is at 420%. And you always want to see very high growth numbers whenever you see a company that trades at a valuation that's very high, right? So the only reason an investor would pay up for a company that doesn't have profitability, that isn't making money, is for the future, is for the future expectation of profitability, and that is almost always demonstrated through growth. And to move this company towards profitability, it's going to need a lot of growth, and I'm happy to see that the growth numbers that we're seeing within the shares are 100% supporting that valuation. So very crucial to see there. Like to see that, and we definitely are seeing the growth in terms of production, obviously, with those numbers today. And then in terms of profitability, so there are some question marks here, and I will cover them. So gross profit margin is minus 141%. This basically means that they lose money on every single car that they sell. So their revenue minus cost of goods sold is negative. So their cost of goods sold is not exceeding its revenue. So every time they sell a car, they lose money. So this needs to change, and it probably is at a higher likelihood to change, just given the recent news, because as the company is able to expand its production facilities, well, then this gross profit margin will come down. Just unit economics here. The more cars that you're making, the more money sense it makes, right? If you're buying a whole facility, buying all the equipment to make 100 cars a year, well, you're going to lose money. But if you can use that same facility with relatively the same amount of equipment to make 1,000 cars, just for an example, that gross profit margin is going to look a lot better when you increase the production within that facility. That's basically unit economics, explained simply. And probably my favorite number here that we're going to cover is cash per share. The company has a massive, massive balance sheet of cash, a massive cash holding. And when you look at it here, the company has $12.14 of cash on its balance sheet. So, that's over half of its market cap in just straight up cash. Obviously, it's going to need to use that cash to invest in growth, but it's awesome to see that the company does have those cash reserves to do everything that it wants to, and to stay solvent as they ramp up production. So really do like to see that. I think the growth numbers are 100% rationalized in the valuation, and this cash per share within the profitability metrics look very, very, very advantageous as well. And then let's take a deeper look into how Rivian stacks up against the peers. So in terms of the stock performance, you can see shares have underperformed the close peers. So not a great sign there. The only stock that's doing worse than them is Lucid in terms of share performance. And then we can take a look at valuation. So obviously these companies don't make money, but price to book, it still looks pretty solid when you compare it to a peer like Lucid, which is a little closer than these other peers. So price to book of 1.2, which is better than the 3.4 and the 5.5 we're seeing from NIO. And these are obviously EV pure plays, and these are a little less so with Nissan and Porsche. So I will keep it moving here. And then revenue growth ranks out pretty well. So when we look at growth metrics, this company is the best amongst all of its peers. So love to see that. And then gross profit margin looks pretty gross when you compare it to peers, but when you compare it to close peers like Lucid, it's really not that bad. It's kind of right on par. And then NIO has the positive gross profit margin, but they've have their production facilities all built out, so it's not really apples to apples there. And then we can take a peek at short interest here. So 13% compared to Lucid at 19, NIO at 9, so about middle of the pack there. And then we can take a look at total cash. So the company has obviously $11 billion in cash, which blows out all these peers out of the water, besides Nissan, which is just a bigger company. So really awesome to see there. And then book value per share is $13 compared to the peers, which is, blowing those peers out of the water. So you got it all up here. Things look pretty good when you compare these numbers to the peers. Even in a vacuum, they didn't look horrible, but when you compare it to peers like Lucid, the stock looks pretty good on paper. And then I'll take a peek at revisions. So for those that don't know, Wall Street analysts will cover a stock and raise EPS and revenue expectations either up or down based on company specific news, general stock market news, general news on the consumer. So really anything that could affect this company. And it's awesome to see that over the past 3 months, Wall Street has become more and more bullish on shares. So we see 13 different analysts raising their EPS expectations compared to 3 analysts bringing those expectations down. So net, plus 10 there. And then revenue expectations have come down. 10 different analysts have dropped their expectations, with 8 analysts bringing up their expectations. So net, down 2. So you get it all together here. We're up 8. We're up 8 8 up revisions in terms of looking at this in aggregate. So good to see that Wall Street is becoming more and more bullish on shares. So just to kind of summarize everything, I do think RIVN is a pretty decent long-term hold here. They've been blowing out their numbers in terms of deliveries. We see Tesla, record deliveries, which is bullish for the sector. Obviously, RIVN, their own company specific news is really the reason it's outperforming today. And then, when we look at the chart, I do think we are ripe for a breakout of about $20, but I would wait till that level hits. And then when we look at valuation isn't great, but we have growth and profitability metrics backing up that valuation and rationalizing the high multiples investors are paying for the shares right now. And lastly, the company grades out very, very well relative to peers. So you add it all up, I think this company is a pretty decent long-term hold. So with that being said, I will end the video there. If you got some value from this video, please leave a like. We post company breakdowns and important market moving news on this channel on a daily basis, so make sure you are subscribed. If you would like to receive my daily portfolio moves, my exits, my entries, and see how me and my team of analysts are trading the markets, join the Discord through the link in the description below to get our free 7-day trial. Also, if you would like to join our free daily newsletter, sign up to our Substack, which is linked below as well. With that being said, good luck everyone. Happy trading, happy investing.